Good day. Ira Epstein of Linn Associates with your agriculture update for this end of business on Wednesday, July 10th, 2019 at 4:15 p.m. Central Daylight Time. Well, we saw today the testimony of Fed Chair Powell. He's going to speak again tomorrow before a Senate committee, but most of the questions we want answered were done. They'll clean things up tomorrow, but tomorrow's the big day in the grain market because we get the WASDE report. We're going to get supply demand. We're getting an idea about soybean acreage. I don't think they're going to do too much on the corn acreage tomorrow. At least that's the market expectation. We're looking to see how the survey went that the USDA did again, and we'll get those numbers they said in August. So I'm looking for the beans to be the focus tomorrow, but you just never know when you get these reports. In addition, whether you know it or not, hog prices have gone up about 8% in the past 2 days. Part of the problem has to do with China. We know that their hogs, they've been culling their herds. Vietnam has the same issue now. I think it's Bulgaria, one of those countries in Europe, has it. So the spread is going on. Plus, the weights coming in to the U.S. packers are lighter than they have been in the past for the hogs. So we're maybe seeing where our farmers have gotten rid of supply and we're getting a bit more current. Plus, the market is always anticipating something out of China. We'll see if that goes on. But as you can see, the market came down recently, tried to challenge the 18-week moving average of closes. That's this red line. And this is a close-only chart, and the market has come back up. And for the week, we're back up 20 cents. I don't think there's a surprise there for a lot of traders. As we were talking just yesterday with this decline, we had this big reversal day. We did get, as you can see from yesterday, follow through today. In fact, nice follow through of another 8 cents. And as I thought, I think a lot of traders have done their evening up, if we will, going into this report. There's still a gap left, one gap in the chart. We filled this one, we have filled that one, and I don't know that that one's capable of being filled. We had talked about that. It would take some pretty bearish information for that to happen, especially if we're looking at lower yields and even a reduction in acreage as to what was planted in soybeans. In terms of the trend, it is still down as defined by the concept of what makes a downtrend are lower highs, lower lows. And the swing line study, this is a chart without it, this is it with it, shows that you've got these lower highs in place and certainly the lower lows. Now what the swing line does is it looks at the previous day to see if the current day is a higher high or a lower low day, an inside day or an outside day up on a closing basis or an outside day down. Then it applies this line that I created, and this is something I did for myself, and it tells me if the market is just plain trending or not. After that, I apply filters, and one of the filters I apply are moving averages. Now, what we were talking about yesterday is we said there were two levels of possible resistance, the 100-day in green and the 18. And as you can see, the market's coming back up towards that. Where the market found its footing was the lower Bollinger Band. And the black lines, Bollinger Bands, are an algorithm designed to keep the market trading within it 95% of the time. My theory on that is the first time you challenge a band to the upside or to the downside, it's an area where I think pros often take some money off the table. Going into key reports, very important because a lot of money likes to get even in futures. Remember, the futures market's not like trading the stock market. You got tremendous leverage. It's more about in and out trading for a lot of the pros. That does not mean it's not about position trading. Let's face it, this market has dropped very nicely. Now the question is, did that bearishness come to an end? We had been oversold. The market is bouncing back to the upside. And I think at 11 o'clock tomorrow when we see the report, a lot of questions are going to get answered. In the meal market, you've negated the downtrend in two ways. Number one, if we take a look at what happened, the market yesterday got up over this high, but it still had the embedded reading. Today it lost the embedded reading. Now, when you lose an embedded reading, what it means is, first off, let's define embedded. Embedded means the two numbers that make up the slow stochastic oscillator, which is a momentum oscillator, are locked in under 20 for both numbers going at least several days in a row under it. When that's lost, it's typically lost by the red line first coming over the blue, and then closing over a 20 level. It's a sign that the market wants to go back towards often the 18-day average of closes, but when the 100-day is under the 18, it could be just that. So I think the market neutralized itself today, period. I don't know that it's done much more than that. And I'm talking neutralized the downtrend in the meal market. In the soy oil market, we have been fighting at this 18-day average of closes for now weeks, couple of weeks. And what is that importance? Well, the longer it does that on either side, you've got to think of the sideways action that you see in the Bollinger Bands creating like a pipe. And in that pipe, there's a spring, and the market is winding itself up, getting ready to move one way or the other. Today's high in the market took out 28.27, the prior high, so we broke the pattern of lower highs and lower lows. You're now trendless. That makes all the sense to me in the world going into a grain report that the trade is looking at very hard. In the corn market, you're still in the pattern of lower highs, lower lows. If the market gets a good rally tomorrow, I would look for the resistance to be the 18-day average, but if the market gets over 448 and closes over that number, it would, number one, by getting over it, it would create a pattern of potentially higher lows, higher highs. A close over it would put the bias up and probably move the slow stochastic to pointing higher, which would be bullish. So the bears, I don't know if they'll defend the 18-day average tonight or tomorrow until they see the report. I'm guessing the smart money is sidelined to a degree right now. In the wheat market, the trend is, first off, oversold. Second, downtrend. You see that. You've got the lower highs, lower lows. You've hit the Bollinger Band, and I think a lot of money went back to what I'll call that even status, waiting to see how wheat responds to all the other reports. Remember, we do get some numbers, I think, tomorrow on the, if I'm right, the spring wheat's going to be fairly important. In the ox sugar, the trend is still down. Lower highs and lower low legacy. Resistance, the 18-day average, but oversold to the point where both, well, how do I phrase this? I want to come back and say it the right way. Yesterday, both numbers were under 30. When you're under 30, I call the market oversold. Either number, in this case, both were. Today, both got back over 30. So I think I'm going to say it's not oversold, but now the question is, what does it do at the 18-day average? If this market were to take out this high right here, and that number is 1265, it could form a reversal on the chart where we end up with a pattern here that we have these lows and then higher highs that could carry towards either the 100-day average or the upper Bollinger Band. So I think that 1265 area is a defense area for the bears. But first, they might get aggressive at the 1258 zone and see what it is. It's for them a 7 to 10 point risk. Interesting point on this chart. In the coffee market, still looks to me like it wants to head to this 18-day average of closes to test out the support there. There is not a trend yet. You have a higher high, lower low. I use the word yet because if you drop under today's low or don't take out today's high tomorrow, because I know how the swing line works, you would have a pattern of lower highs and lower lows. The dilemma for those that want to be bearish is you're not closed under the 18-day average, so the bias is up. Either way I cut it, this market's got to prove what it wants to do next. In the cocoa market, the upper Bollinger Band has stopped the rally again, and that's a common occurrence that you see. Now, it didn't happen back here, but I'd have to show you more of the chart to show how the sideways action was developing there. Right now, what we have is a market that I think is just a broad swinging back and forth. It does have an uptrend. It's got the pattern of higher lows, higher highs. Momentum is pretty flat right here, but not pointing down. And support could be the 18-day average of closes. If you got under this number, 28, if I'm correct, that's 28.30, I think. Yeah, 24.30 rather. If you took out 24.30, that could be a bit of a problem for the market. I don't know how big of a problem because you'd be back down to the lower Bollinger Band. But I do expect the bulls to try to support the market there. In cotton, we're going to look to see how the reaction to all the other grains are in addition to this. The trend has been down. It's been a breakout to the downside. The market is now what we call hugging And that is the word, hugging the lower Bollinger Band. It gets under it, it comes right back to it. Could be back and forth action here. I still expect resistance at the 18-day average, but going into a grain report, it is still quite oversold. Then we get to the cattle market, and we're looking at beef prices doing better. This is also called hugging the upper Bollinger Band. It's an attempt to push the market out to the upside. Whether it holds or not, well, we've got to wait and see, but the trend is up until the market takes out. This right over here, 105.85, the resistance is right what it's hugging at this point, and it is overbought. In the feeder cattle, it's the same pattern. You've had higher lows in place, higher highs. The trend has been up. Now the market's at a resistance point, that upper Bollinger Band, and hugging it. Is it going to be able to do any more with that or not? In the hog market, you can see how the market quickly reversed itself yesterday. This was a big reversal, and I think I'd been mentioning here that this could be the formation of a bottom. Today you had big follow through to the upside. Resistance does come in at 83.67, let's call it, and a half. That's the upper Bollinger Band, but it's been a heck of a thrust. If the market pulls back, I would look for support towards that 18-day average at closes. As I mentioned, we're going to have a big grain report tomorrow, and we're going to be writing about it in detail. We've already put out for those that get our market information what the expectations are, what we're looking at in the weather right now, what we think is going to go on with world demand as well. So if you want to be up on it, how we do this is we're writing these reports throughout the day. We're dropping them, if you get our information, right into your email box and you're kept up with it, or you'll get a flash notification if you have our mobile app or our QT platform. We cover all these markets, but you know we're going to be settling tomorrow and really focusing on the grains because it's a big day for the grains. I don't think it's going to be as big a day for the testimony by Mr. Powell as the one he did today. To get information and see what this is, we'd like to put it in your hands. Give us a call or go to our website, sign up for the free info. We'll be sure you get it. And while you're there, probably sign up, if I were you, for our trading kit and some of the other things so that you get our charting software that goes along with this. You can always click up here. If you're watching me on YouTube, it'll take you right to our landing page where you can do that. I'm Ira Epstein. You have a good day. Should be an action-filled day for the grain traders tomorrow. Take care.